Good morning, everyone. Welcome to Monday. Welcome to Monday Minutes. First and foremost, a big thank you to Fox Business, Maria Bartiromo, for including us as a guest panelist again last week. Bloomberg over the weekend, featuring us in an article in and around 10-year yields. Let's run through it to start this Monday. First and foremost, Fed meeting in their blackout period, price for 25. We think they delivered 25. Certainly a spirit of gradualism going forward. We tend to favor the sentiment coming from Fed Governor Waller, a shortlisted candidate to be the next Fed chair. And then on the balance sheet, Chair Powell saying they could very well stop balance sheet runoff in the near term. But keep in mind, in and around the debt ceiling, the Treasury's general account on the liability side, it goes down, it goes up, it affects bank reserves. In this window where we replenish, it's now affecting bank reserves lower. So in the chairman's words, let's wait and see, but certainly pressure in the repo market, pressure in the Fed funds market, the Fed watching these money market rates very closely. 2, China-US de-escalation, President Trump on with Maria Bartiromo over the weekend saying these high tariffs are unsustainable. Treasury Secretary Bessent meeting in Malaysia with his counterpart in China ahead of meetings to come between President Xi and President Trump. Markets clearly watching this. On the shutdown lingering, the impact here, not so much in the near term, but in Chair Powell's words, the longer this lingers on, the integrity of the data, once we do come online, will be called into question as we enter that December meeting. That's something to keep an eye on. The CRE, equities, risk assets, volatility extremely low since April. Risk assets performing extremely well. So a little volatility coming in here we don't think is a big deal. We do see a window coming up here for potential buybacks, continued earnings, the GSIB banks really crushing it across the board. Some concerns on the regional bank sector, but we don't view what we're seeing right now akin to what we saw in 2023. 10-year yields featured this weekend with Bloomberg. Very fortunate. Thank you, Bloomberg, for that. There's room below. For context, over the last couple of years, 335, 350. If you look at the short end, terminal 3%, 2026. You look at 2025, it seems like the short end is priced. If we do get a further move lower in rates, we would expect that to come a little bit further out the curve with perhaps a flattening consolidation of the yield curve from these levels. And lastly, CPI on Friday, the highlight. We are deprived here for economic data. We're leaning on private sector data, which is fine, and real money accounts have already been using private sector along the way over the last couple of years, but we need a compilation of both. We will get that CPI reading on Friday, hopefully, but we don't expect that reading to impact the decision for next week, fully priced for 25, and we think the Fed will deliver. Wishing everyone a great week ahead, wishing everyone a great Monday. I'm Greg Faranello. I'm head of U.S. rates for AmeriVet Securities.